So we will now proceed. It is still your tutor here, Berman, and you can call WhatsApp via 0243583352. Right. I presume that you have already gone through the recorded lecture and the keys of the introduction, because I indicated that do that, and it was this same document I used for that recording. So you can call WhatsApp 0243583352, right? Or you can email me via bermanhenry1@gmail.com. That's okay. So any sort of issues to discuss, you can actually have it in here. So as I indicated, today is our official day for meeting, and that you have already gone through the introduction bit of the paper. So you know the sort of topics that we need to go through together with the IT bit, and some few issues of what trend analysis that we need to do or to need to look at based on the introduction made by the examining team in this perspective. Your exams are still computer-based exams, but notwithstanding, permit me to look at the first topic, right? The first issues in there looks at determine the cost per unit of a product and service. Determine the cost per unit of a product or a service. A moment. So determine the cost per unit of a product or service. So if you have listened to the recorded lecture, we tend to use what you call the principles of marginal costing, absorption costing, and activity-based costing to determine a section of the cost per unit of a product or service. We tend to use marginal costing, MC, absorption costing, AC, and activity-based costing, ABC, to determine overhead valuation. So we say overhead valuation. But our quest to determine the overhead of a product or a service wasn't an easy one. It wasn't an easy one. We first of all came with marginal costing. We introduced marginal costing technique. It wasn't good enough. It was having some blemishes. There came an advancement of the marginal costing, giving us absorption costing. Absorption costing was also having a problem. We developed absorption costing. There came activity-based costing. And since the introduction of activity-based costing as a way of valuing overhead, there hasn't been any introduction or any sort of additions anymore. Still the same. But students are to note that marginal costing is not examinable. Your examiner do not examine it. So do not actually worry yourself. And that is why if you tend to look at exam kits right from 2000, and if you have from 2009, that is fine. But a lot of students tend to have from 2012. Whatever, all sort of past question that you tend to use, being a BPP or Kaplan or whatever, you do not see a question where the examiner will say that determine the overhead cost of a product using marginal costing. Never. But we will tend to look at the application of marginal costing when we tend to come to issues of variance analysis. But determining the value of an overhead using marginal costing, it is not in your syllables, right? But what is in your syllables to look at is determine the overhead valuation of cost per unit of a product or service using absorption costing and activity-based costing. So if you go through your exam kits, you see a lot of questions in the case of overhead cost, absorption costing, and activity-based costing. In that regard, you need to know your paper and know what the examiners are actually coming out with, right? So this is not a complicated bit. We tend to walk you through this document to ensure that you are in good shape, right? So what is of my focus here is to let you know that anytime we are talking about marginal costing, I've already shared the recorded lecture to this effect, and I'll still share one to that effect to help. I took it from right from the beginning. So I think that it is good for you to look at it. But notwithstanding, I'll still point some few bits which is very, very important for you to consider. All right. So anytime there's a marginal costing, we talk about contribution. And contribution, we are talking about sales value minus variable cost. The contribution can be a total contribution or can be a contribution per unit. If it's a total contribution, then we need the total sales value minus the total variable cost. If it's a contribution per unit, then we need the sales per unit, we need the variable cost per unit, right? Sales per unit, variable cost per unit. That is okay. So this has all the time been an example in here for us to look at. And because we have knowledge in this bit, I would like to move very quick. So we have a table over here which says that we are to complete the table, right? So first of all, the first line is saying that we should calculate what revenue. And revenue, like total revenue, price times quantity. So we can multiply the price by the quantity. So here the quantity is 2,500. The price here is the selling price. And the selling price, we have the selling price to be 20. So I can multiply the price by the quantity. Here, in the first instance, the quantity is 2,500. The second instance, the quantity is 5,000. The third instance, the quantity is what? 7,500. And the last instance, the quantity is 10,000. So what I'll do is that I can multiply the quantities by their corresponding prices. So in getting the revenue for the first instance, I need to just multiply 20 here by the number of units, which is 2,500. So 2,500 units. Whatever answer I will get will be the revenue in that regard. Then I'll do same for the other years. The price is still the same. So I say 5,000 times 20, right? Or let me just make it order, right? So 20 times 5,000 units. Right, the next bit is still going to be 20. That is the selling price times 7,500 units. I think these bits are not complicated. In the last year, 20 times 10,000 units. That's sort of. So because variable cost changes based on changes in the volume of production, what we tend to do is that we still multiply the variable cost per unit by the total number of units, because we only incur variable costs when we tend to produce. So as we tend to produce some quantity, we tend to get a variable cost to that effect. Now, the unfortunate aspect to this variable cost is that we were not given the total variable cost, but instead they gave us the direct material cost, which is a variable cost. So we have direct material cost, which is 6 here, which is also variable. We have direct labor, which is also variable. So direct labor cost is 2, that is also variable. Then we have the next bit, variable overhead cost per unit, which is also what? Which is also variable. So at the end of the day, the total variable, so let me just say total variable cost comprises of labor cost, which is variable, material cost, which is variable, and variable overhead, which is already variable. So it's going to be 6 plus 2 plus 4. 6 plus 2 plus 4. 6 plus 2 plus 4. So at the end of the day, the total variable element here will give us what? 12, right? So we incur variable cost on all productions, quantity that we produce. So now that we've seen that the selling price per unit is 20, and the variable cost, you need not to calculate the variable cost of material, labor, and variable overhead. They are all variable. So we tend to determine the total variable cost per unit. And at the moment, we have gotten it to be 12. So what I'll do is that we still incur variable cost based on quantity you are producing. So as you produce that quantity, you incur variable cost, which comes with that. So I'll say 12 still by 2,500 units. 2,500 units. Then I move on to the next bit. 12 times 5,000 units. Next, 12. So you understand where the 12 is actually coming from. Very important. I've indicated that. So 7, I've explained that. So the next item is going to be 20. Let me just edit this bit by taking these items in here off, so that at least there's going to be more spaces for me to deal with that. So do same in that regard here. These bits have already been shared in the recorded lecture, so it's not of a problem. So I'm in good shape to delete every item. Don't know why it's not making a move, but I think that it's better than any other thing. That's okay. So I'll do same for the last bit. Right. So I think that I'm in good shape. Very important. I go through this bit. That's okay. So here, I can also take this gentleman off so that I get more space. Just drag this guy here and bring it to the exact position that it's supposed to be. Good shape. Right. So I've showed you how to determine the variable cost, which was 12. So over here, what I'll do is I'll still multiply 12 here. Sorry, put it in here. 12 by 10,000. So 10,000 units. Note how we got that 12, very important. So at the end of the day, the total revenue minus the total variable cost gives us contribution. Total revenue minus total variable cost give us contribution. So we said that to calculate contribution, which this terminology, you're going to look at it over and over again in our lecture. So it's important you look at that. Contribution is equal to sales less variable cost. So if we ask you to calculate total contribution, then you look for total sales minus total variable cost. If you ask you to calculate contribution per unit, then we need those bits also per unit. So contribution per unit. If we ask you to calculate contribution per unit, then I need the sales per unit. Everything should be per unit, right? Minus variable cost per unit. I need everything per unit, since I'm calculating contribution per unit. But this turns out to be a formula every student should know at this stage. But in another perspective, when we tend to go further, students will know that contribution can also be calculated. Contribution can also be calculated as first cost plus profit. And that is what I want every student who really want to get a pass should know. The first instance, every student who is writing or not writing knows that. So if you know it, you are not what? A champion, if you know this bit. If you know for sure that contribution is equal to sales minus variable cost, if you know this bit, you are not a champion. It is something that every student tends to what? To know, right? We can calculate contribution by subtracting the variable cost element from the sales value. So if it's calculating contribution per unit, it is sales per unit minus variable cost per unit. Every student who is either writing or not writing the exams knows that bit. But the second formula to calculate contribution is what a lot of students do not know. And if you know it, then you tend to say that you are better than another individual. So contribution can also be calculated as first cost plus profit. So if you add the first cost to the profit figure, you also get contribution. Right? Let me use this moment to explain to you why it is so. First of all, permit me to take these guys all here off, so that at least I'll have some space to deal with issues of that nature, right? Take all these bits off, then I have some space to deal with issues like that, right? So I think that I'm in good shape. Right, so far. The rest are fine. Okay. So we said that marginal costing is the accounting system in which variable costs are charged to cost units and fixed costs of the period are written off in full against the aggregate contribution. So with marginal costing technique, fixed cost is not incorporated into the cost of a product. That is how sad things can be. Your CEO has employed you to be a management accountant of the organization and expect that any overhead cost that you have incurred, you are to charge it into the cost of a product, such that if consumers or customers are buying that, in effect, they are paying for that overhead. So if I should know, if I'm a consumer and I'm to be aware or privy to the information that the management accountant at, say, KFC is using marginal costing system, I need to be happy as a customer. Why do I have to be happy? I need to be happy because if I should see them tiling their premises, that cost of tiling of their premises will not be pushed into the cost of what the product for me to pay for. And if a CEO happens to see you use marginal costing as a technique in valuing overheads, he is supposed to sack you right away. Why? Because you are going to make him incur that overhead cost, and he's not going to push it on to consumers for consumers to pay for that. But in the ideal sense, if you see us tiling our premises, customer who is passing, you shouldn't be happy. At the end of the day, you are going to be the one to pay for it. So we are saying that marginal costing is the accounting system in which variable costs are charged to cost unit. That is true. All variable costs are charged to cost unit. But what about fixed cost? Fixed costs are not charged to cost unit. We rather use fixed costs. We treat fixed costs as a period cost to reduce the statement of profit or loss. So the CEO profit will be reduced by that figure, meaning that that has been an expense to the producer, and that producer is never going to recover that money from consumers. So that is why that CEO should be in the happy mode to sack you if he tends to know for sure that you're using marginal costing in valuing overheads. At the end of the day, you want him to incur cost, but you do not want him to recover the cost by pushing it into product for consumers to pay for you to recoup that money. So an ideal CEO should be happy enough to sing praises, hallelujah, to sack such a management accountant using what marginal costing as a basis of valuing overheads. So instead, we do not charge that first cost into cost units. That means we do not charge it into the product for consumers to pay. We treat it as a period cost, reducing the total profit of what the CEO. You really want your CEO to reduce to actually what you want to reduce, or you want him to incur losses. You don't want him to recover that. He would not be happy with you. In fact, even you were the CEO, you will not be happy. That's sort of. So marginal costing, its special value is in recognizing cost behavior. So all these bits in learning marginal costing, the purpose of what? Cost perspective, knowing how to determine cost bit. And because it helps us in determining cost issues, it helps us in decision making. Because at the end of the day, what is the essence of determining the cost of that product? It's for the purpose of making decisions. But just that it's having limitations, which people do not like to use that. The marginal cost is the extra cost arising as a result of making or selling one more unit of a product or a service. And I also indicate that this sort of definition, students who are either writing or not even writing know the definition of marginal cost. Just like what happens in economics, that is the extra cost. The marginal cost is the extra cost that you tend to incur for producing or selling one more or one extra unit of a product. But the other half of the definition is what a lot of students do not actually have in mind. If marginal cost is the extra cost you incur for producing and making or selling the extra unit, then it can also be that is the savings in cost as a result of making and selling one less unit. It is how much, if we were to make that extra unit, you incur that as a cost. But if you decide not to also make that one extra unit, it is going to be a cost that is being saved. So if we can say that the cost incurred on one extra unit can also be a cost saved for not making that one extra unit. So I have indicated that the first half of the definition, a lot of students tend to smile because it is cool with them. But the other half, they do not like that, right? A lot of students do not know that as a definition. And if you know that bit, then we tend to see that you are doing a good job, right? The first bit, whoever decides not to even write or write, still know that. So what is the importance of that? You still have to know it, but do not be happy so much for knowing that, because it's absolutely nothing that have you done. We have given an indication that the terminology contribution is going to be looked at over and over again in your quest to studying performance management. So contribution is a key concept. We will come back to time and time again in management accounting or performance management. So what I was actually explaining, which called for going back to still explain issues again, was the calculation of contribution. And when we multiply the selling price by the unit here, right, and subtract the variable cost from the total sales revenue, you now get the contribution. So wherever you are, you can do that computation for me. 220 times 2,500. I think that give us what? 50,000. That give us say 50,000. So I can just I presume that I've multiplied, right? So the day of exam, I'll just say 50,000. Let me, because the exams is a computer-based exams, let me just go back to the normal, right? What we are supposed to look at. So what I'm going to do is I'm going to create this same in the case of Excel, then get it things done. I'm going to create in the form of what Excel. Right. So let me even close this. Let's use an Excel sheet to do that. So thereafter, wherever you are, you also use an Excel sheet to also get it done. So now going through this paper in the case of online is really beneficial because we tend to do everything to show students in the case of what Excel, right? So what I'm going to do is that I just have to indicate my elements in here. Let me just a little bit of a space, but that doesn't really matter. So here I'll just put up there, let's say activity levels or unit produce, right? Unit produce. Let me share that screen for students to see that, right? Let me share that screen. So unit produced, the first instance was 2,500 units. So 2,500 units. Second, I just have to copy and just change these bits, right? So I just have to copy and change them. So the next one is 5,000. The next bit is 7,500. So that makes me move very quick. And the last bit is 10,000. So I have 10,000. Have 10,000. So this is what I have at the moment in the case of a schedule to do it. Okay, so that ends it, just like the table. And the first one was the sales revenue. Sales revenue. Now, the selling price per unit was 20, right? So let me just indicate here so that I can copy them. Selling price per unit. Selling price per unit. Selling price per unit was given to us as 20. Then we're able to estimate the variable cost. Material cost was variable, labor cost was variable, and variable overhead was variable. So at the end of the day, we said the total variable cost. The total variable cost is what? 12. The total variable cost is 12. The total variable cost is 12. At the end of the day, we can estimate the sales revenue. So first one, I'll just click on this cell 20, then I multiply it by what? I multiply by 2,500. So I get my answer in there. And the next bit, I also say 20, right? Times 5,000. I'll get my answer. The next, I'll say 20 times 7,500 units. I'll get my answer. And the last bit, 20 times 10,000. So I'll get my answer. At the end of the day, I've gotten the sales revenue. The next one is the variable cost. Variable cost. We incur variable cost based on quantity we produce. So if I have the variable cost and this cost varies, as you tend to increase or change the quantity you are producing, variable cost also changes. It's not like fixed cost. So we say variable cost is sensitive to production, but fixed cost is insensitive to production. Fixed cost is insensitive to production. Fixed cost is insensitive to production. Variable cost is sensitive to production. Why do we say it is sensitive? It's sensitive because an increase in quantity produced increases variable cost. If we are producing more quantities, variable cost tends to increase. If we tend to reduce quantities we are producing, variable cost decreases. So the quantities you are producing is what is going to determine what the variable cost is going to be. So we say variable cost is sensitive. It responds to that stimuli. It's sensitive to quantity produced. But the case of fixed cost, it is insensitive. Being it you will want to increase the quantity you are producing or not, fixed cost is not fixed. It is what? Insensitive. Right. So variable cost is 12. We've indicated that. So times 2,500 units. Then the next bit, then to have 12. Variable cost 12 times 5,000 units. You have the next one, 12 times 7,500 units. They have the next one, 12 times 10,000. right? So first you have the sales revenue, you have the variable cost, you can calculate contribution. Contribution is sales minus variable cost. So can we put it in bracket here? Sales minus variable cost. So I can subtract them easily and just say this minus that. Easy peasy, I get my answer. I'll just copy and put them in the other spaces. Very smart, I get my figures, I go my way. So the next bit in that form of a table, was total contribution if estimated that. Let me share my screen so that this you can see where we have gotten to. Right? So we have been able to fill the spaces for what? Total contribution. The next one is the fixed cost and the total profit or loss. So we are left with fixed cost and the total profit or loss. So let me share that. So you're left with the next one, which is fixed cost. Fixed cost. The next one is total profit or loss. Total profit or loss. So fixed cost per the question, the document for this fixed cost. Fixed cost was given to us as 25,000. You can see that from this point, right? So we stated that fixed costs for the period, right? Fixed costs for the period are 25,000. So you can see that it's 25,000. That's okay. So we say the fixed cost for the period is 25,000. And so far as fixed cost for the period is 25,000, that means every time is what? 25,000. So you can see the fixed cost highlighted now, the fixed cost. So in the fixed cost. These two formulas, note them, right? Good. Note them. If you just join, I saw some people now joining. So please, if you just join, formula for calculating contribution, those two formulas, be very conversant with them, right? Good. It said contribution can be calculated as sales minus variable cost or profit plus fixed cost. Be very careful with those definitions, right? So every period is 25,000. Just a matter of copying one, just spreading it across. It makes life very simple. So the computer-based exams makes life very hot, flexible. So the next one is to calculate the profit. How do I calculate the profit? The profit is the sales. Please look at how I'm computing the profit. I can say profit equal to sales. Let me even write it as a formula here, probably in the next line for individuals to look at. So I can compute profit by saying that profit is equal to sales, right, minus variable cost minus fixed cost. I can use this as a formula in calculating what profit. I can also say profit, please you have to note these formulas. I can also say profit equals contribution minus fixed cost. These formulas are important for you to note. Just like the case of the contribution bit, where we say contribution is calculated, right? Contribution is calculated as sales minus variable cost. You can also say contribution is equal to profits. It's equal to profits plus fixed cost. Profit plus fixed cost. So these are important formulas. These are formulas to calculate contribution. Formulas to calculate contribution. Formulas to calculate what? Profits. Formulas to calculate contribution. Formulas to calculate profit. So note them and ensure that you have it in mind. Very, very important. You do not know when exactly these things are going to save you. So far as I'm going to calculate profit, I have the contribution over here to be 20,000. I have the fixed cost here to be 25,000. Then I can subtract the contribution, the fixed cost. So I'm not getting what? Negative 5,000. So I can put an equal to sign here and just say the 20,000 here minus the 25,000 and the 25,000. So that gives me negative 5,000. That means there's a loss. What I have to do is to copy, then put it in the next cells. Copy and put in the next cells. So basically, what do I have? Contribution minus fixed cost will give me profits. So what formula am I using? I'm using the second formula. And what I've highlighted at the moment, let me highlight that in probably, let's say, blue, right? This is the formula I'm using. Contribution minus fixed cost will give you what? Profit. So basically, that's what I've used. You can see the next column, the contribution was 40,000, the fixed cost was 25,000. So by subtracting C6 minus C7, cell C6 minus cell C7 will give me what? 15,000. 40,000 minus 25,000 give me 40,000 minus 25,000 give me 15,000. The same applied to the next column. Where contribution is 60,000, fixed cost is 25,000. That gives me a profit of what? 35,000. And the next bit, the contribution is 80,000, the fixed cost is 25,000. That gives me profit of 55,000. It was only in the first cell that gave us a loss of 5,000. So I will still proceed in the case of the material at hand. Then at least you look at it. I just want you to ensure that at least you can also see exactly what the issues at hand. So profit or loss has been estimated. The next thing is contribution per unit, then profit or loss per unit, right? We are in this section. Which section are we now? We are in this section. This is the section in which we need to deal with these two, contribution per unit and profit or loss per unit. Now, if you have the contribution and they say calculate contribution per unit, you just divide by the number of units. Easy peasy, right? So the next thing says you should calculate the contribution per unit. Contribution per unit. And the next thing says you should calculate the profits per unit. Profit per unit. This is easy. In calculating contribution per unit, you should know the contribution, you should know the unit, then you divide. It's contribution divided by unit. That's what we call contribution per unit. So when you ask to find the contribution per unit, you ask yourself, what is the contribution? What is the unit? You divide. It's contribution per. The word per means divided. So contribution divided by unit. So in the first instance, the first column, what was the contribution? The contribution in the first column is this 20,000. Then I'll divide by the number of units. What is the number of units in the first column? 2,500. So 2,500 units. What answer am I getting? I get 8. Please, if I tend to move, if you do not get an understanding, you just zoom in. When you zoom in, do not mention my name. Just zoom in and ask your questions straight away. There's no need for you to come out with the introduction. Okay, so are you saying this? Put your question in there straight away. Let's make a move. Right. So if I'm dealing with the second column, I'm still looking at contribution per unit. Contribution divided by the unit. So the second column, what is the contribution in the second column? The contribution is 40,000 here. Then per unit. So what is the number of units? The number of units here is 5,000 units. So divide by 5,000. I still get 8. I move to the next column. What is the contribution here? 60,000. I divide it by the number of units. 7,500. So that's also give me 8. Then the last bit, what is the contribution? You can see that from that line, right? You can see that from that line. That's the contribution line. So what I'll do is that I'll say contribution here. The contribution, the last bit is 80,000 divided by the number of units, 10,000. Right? So at the end of the day, we end up getting 8, 8, 8, 8, 8, 8. That is the answer you have gotten. You proceed. You move on to the next column, which says profit or loss per unit, right? Profit or loss. Let me just bring the loss. Profit or loss per unit. Per unit. So it can be a profit or it can be a loss. But if it's a profit, you divide the profit by the unit. If it's a loss, you divide the loss by the unit. The unit do not change. Still 2,500 in the first case, 5,000 in the second stage, 7,500 in the third, and 10,000 units in the last bit. So this is the column where I'm supposed to indicate or compute the profit or loss per the unit. In the first instance was a loss, so I calculate loss per unit. So what is the loss? The loss was negative 5,000 divided by unit. How many units do we have here? 2,500 units. So I divide, and in the second, I guess minus 2. The second instance here, it was a profit. It wasn't a loss. So the profit is 5,000 here. So 15,000. And divide by the number of units, which is 5,000. So I get 3. The next instance, it was a profit of 25,000. I divide by the number of units, 7,500. Then I'm getting 3.333. Then the next instance, the contribution, the profit was 55,000 divided by the number of units, 10,000, 10,000. And I'm having 5.5. So now that I've been able to determine the contribution per unit, the profit or loss per unit, I think that ends it in that case. But do not worry, I'll still move you to that old document, right? So that was the end. Now, so we have been able to fill this sheet, these spaces. The next bit is to talk about the advantages and disadvantages of absorption costing and marginal costing. But you can see clearly that I've put some things in brackets. I've put some things in bracket, labor hours and machine hours. I'm trying to say that in absorption costing and marginal costing, absorption costing and marginal costing are said to be the traditional costing techniques. So we say absorption costing, I just shortcut it, AC, absorption costing. Absorption costing, I just shortcut it what? AC. And marginal costing. And marginal costing. And marginal costing, I shortcut it as what? MC. So you see our traditional costing techniques. Our traditional costing techniques. I indicated clearly from the beginning that absorption costing, marginal costing, activity-based costing, these topics came for students to learn because of the discrepancy in the valuation of overhead. Management accountants, performance managers were actually struggling in determining the valuation of overhead. But we want a situation where there's standardization, that if an accountant in Accra, how you determine the value of overhead, when we move you to Mozambique, you should have the same way of determining the valuation of overhead. So note that these topics, absorption costing, marginal costing, activity-based costing, never came to help us determine the total cost of a product. Mind you, and note that total cost of a product consists of direct material cost. I just make it DMC, direct material cost, direct labor cost, variable overhead, I make it O/H. Then we have what fixed cost, which fixed cost will have the overhead. So let me just say fixed overhead. So that will give us, let's say, fixed overhead. So at the end of the day, when we add these three, so direct material cost, X, direct labor cost, XX, variable overhead, SX, we are just using figures, right? So fixed overhead, also XX. At the end of the day, we now get what? The total cost of the product. At the end of the day, we get the total cost of the product. Say the total cost of the product will now make up of both the variable and what? The fixed. So variable and the fixed, right? At the end of the day, the total cost of the product is what we have at the moment. Then if there's any profit to add, you can just create a profit percentage. You can add a profit percentage to it. Add a profit percentage to it. So that profit added will now give us the selling price. Will now give us the selling price. How much we sell that product. So that's why we have in simple business maths, it's a selling price equals cost price plus profits. The same bit we tend to look at over here. But you cannot decide to proceed to the selling price bit if you have not even determined the cost price. And in determining the cost of a product, we do not use marginal costing, absorption costing, activity-based costing to determine direct material cost. I all the time talk about it. We do not have a section where we use marginal costing, absorption costing, activity-based costing to determine material cost. We don't use it for that. We cannot use marginal costing, absorption costing to determine the direct labor cost. These three topics, marginal costing, absorption costing, and activity-based costing, came because of the valuation of overhead. So we can use absorption costing, activity-based costing to look at the valuation of overhead. Marginal costing is not considered by your examiner, so it is not going to be an issue we are going to look at. If it's not in the syllabus, please, I'm not going to waste my time with it. So what we are going to look at is that we are going to look at how to use absorption costing and activity-based costing in determining the valuation of overhead. So we do not use these three topics to determine the overall or the total cost of a product, because we cannot use it to determine the material cost, labor cost bit. So how can you use it to determine the total cost of a product? We can't use marginal costing, absorption costing, activity-based costing to determine the overall or the total cost of a product. Instead, we can use it to determine the valuation of overhead only. So absorption costing, marginal cost, activity-based costing is used to determine, it's a costing technique, but we do not use it to determine the overall cost of the product. But a section of the cost of the product is what absorption costing, marginal costing, activity-based costing seeks to achieve. Basically, they actually came in boost for us to learn because of the discrepancies in the valuation of overhead. So in our quest to solve that problem, or in our quest to bring in that standardization, that normalization, our effort actually brought, first of all, marginal costing, which this marginal costing was only using the variable element only in the valuation of overhead, and then treat fixed cost as a period cost. It doesn't charge fixed cost into the cost of a product. So then we said that marginal costing, we are not good enough. Because when you look at cost, we are not looking at only variable, we have also fixed. So why don't you factor all the variable and the fixed elements into the cost of the product? If that is what you do not do, then you are not a good technique. So we develop marginal costing further to give us absorption costing. So MC led to what? AC. MC led to AC. So marginal costing, because it's only considered variable element in the valuation of overhead, we say you are not good enough. There came what you call what? Absorption costing. Absorption costing said, I am in to solve the weakness of marginal costing. My friend, marginal costing only use variable elements in the valuation of overhead. I am going to use the variable and the fixed. I am going to use the variable and the fixed elements. So variable and the fixed cost were used in the valuation of overhead. But the only limitation, what led absorption costing to activity-based costing is that good enough. Absorption costing, you are good. You came to solve the weakness of marginal costing. But we still think that you still have a problem. Though you use the variable and the fixed element in the valuation of overhead, the way you do the valuation is arbitrary. Why is it arbitrary? It's arbitrary because you only use 1 meter to justify the fate of all of us. But in real science, we are different. So why don't you bring in different meters to account for the different status, the different nature of all of us? So each and every one will have his own meter, then you account for that. It's not supposed to be that you use the fate of one person to crown or justify the fate of the remaining guys. So absorption costing, you use variable and fixed element in the valuation overhead, but you are not good enough. So activity-based costing came in to solve that sort of arbitrary way of overhead valuation. So ABC, activity-based costing, still use variable elements and fixed element in the valuation of overhead. But the beautiful thing it tends to do is that it doesn't value the overhead in an arbitrary way. So you just say arbitrary valuation are not considered. Arbitrary. So arbitrary valuations are ignored. Valuations are ignored. That makes it a very good and ideal technique in the valuation of overhead at this point in time. So I indicated by telling you that though we have 3 main topics in the valuation of overhead, the first 2 are called traditional costing techniques. Traditional overhead costing technique. Let's put it that way, a good way. Traditional overhead costing techniques. Marginal costing and absorption costing are called traditional overhead costing techniques. And the modern costing overhead costing technique, the modern overhead costing technique is activity-based costing. So you can see the quest, you can see the effort, how we suffered before getting to activity-based costing. Right. So you're also a student and you are learning that, so you are part of the people who suffered, right? Good. So let's move on. So we are trying to say that in using absorption costing, activity-based costing in valuing overhead, the basis of absorption is either labor hours or machine hours. It's either labor hours or machine hours. We look at the details of that. Though we are not going to look at how to determine the overhead valuation using marginal costing. We're not going to look at determination of the overhead valuation using marginal costing because it is not in your syllabus and it's not going to be tested. So why do you worry yourself? I'm not going to worry myself. Every sitting, I do not worry myself in that bit. F2 students, management accounting level 1, worried themselves with that. I am not teaching F2. So next one, absorption costing presents the following advantages. Absorption costing presents the following advantages. So 1, These are some advantages. We are not trying to say that these are the only advantages of what absorption costing for you to chew in your heads and that sort of. Understand the bit when it comes up, you think and you write for the exam. Do not learn like academic student here, you chew things in your head. When you do for exam, you can decide to chew. When you do for exam, you forget it. Be very natural, understand the bit and just move with it. That is it. That's a professional qualification. So we are trying to say that if you are valuing the cost of inventory, then absorption costing can help you. So we say that it includes an element of fixed overhead. Yes, absorption costing includes fixed overhead. It does not look at only variable in inventory values. In accordance with IS2. So this is an accounting standard in valuing overhead. So in valuing overhead, if you tend to use in valuing the cost of inventory, you know the cost of inventory will have overhead in there. So in determining the cost of inventory, right, the overhead over there, if you use absorption costing, it will be good because the absorption cost will consider both the variable element and the fixed element. So that's the advantage of absorption costing there. Next one, analyzing under or over absorption of overhead is a useful exercise in controlling cost of an organization. It's actually because it looks at the broader picture, if there's going to be overvaluation or undervaluation, you spot that. If there's an overcharge or undercharge of overheads, this analysis will help us get it right. The third point is that in small organizations, absorbing overheads into the cost of products is the best way of estimating job costs and profits on what? Jobs. So that means that if you are having a small organization, absorbing overheads will really be ideal to help you determine the job cost, the cost of every job, right? If you tend to have a car to wash, in the different forms of car to wash, it will not be the same cost, right? So the type of job that you tend to have, it becomes easy for you to determine the cost if only you are factoring in absorption costing, because absorption costing will look at both the variable and the fixed elements, right? So we can also look at the advantages of what marginal costing. But before we look at the advantage of marginal costing, we are bringing in some shortcuts to make our life very simple over here. The main disadvantage of absorption costing is that it is more complex to operate than marginal costing, and it does not provide any useful information for decision making like marginal costing does. So that is the limitation. That is the limitation or the disadvantage of what absorption costing, as I have highlighted, right? I'm talking about this bit I've highlighted, as you can see on the screen. So we now move on from the advantages and disadvantages of absorption costing to the advantages and disadvantages of what marginal costing. These are not the only advantages, disadvantages. So students are to be alert. So we move on. Marginal costing. This guy only consider variable elements. So marginal costing presents the following advantages. So one, contribution per unit is constant. And you can see clearly that when we calculated the contribution per unit, we got 8. So contribution, because it is the same product, unless otherwise we're looking at different product, then contribution will change. But if it's the same product, how much you sell that product is still the same. The variable cost you incur to produce that same product is still the same, homogeneous product. So if the selling price is the same, the variable cost is the same, then the contribution should also be the same. You realize that for the earlier submission, you realize that the selling price per unit was $20. It was the same throughout for all the products. The variable cost per unit was 12, and it was the same for all the products. So if the sales price per unit is not changing, the variable cost per unit is not changing, then you cannot tell us the contribution is going to change, because it's still going to be 20 minus 12, 20 minus 12, 20 minus 12, 20 minus 12. Or let's say about the 20 change to 25, then you say that the contribution will change. But so far as the selling price per unit and the variable cost per unit is the same, contribution becomes the same. So you are saying that contribution per unit is constant, unlike profits per unit, which varies with changes in sales volume. So profit changes because with profit, we are going to factor in fixed cost. Contribution, we only look at sales minus variable cost. That will give us what? Contribution. But in the case of profit, first cost comes in, then to actually change the whole what issue. So it's sales minus variable cost minus first cost. Then that will give us what? Profit. That will give us profit. Right. So let's make a move. Next. There is no under or overvaluation of overheads under marginal costing. There's nothing like that. Because when you look at the variable elements, you do not factor in first cost, where we tend to have the huge cost, both the variable and the first element, to make things complicated, that the possibility that we get it wrong to either lead to overvaluation or undervaluation. We only consider just one small section, variable element, in the valuation overhead. So probability of you getting things wrong to create either under or overvaluation is not something that mostly what happens. So first costs are a period cost and are charged in full to the period under consideration. And this is bad, right? To the producer, he's going to be very furious with you for applying such a system. You don't make customers pay for that. It will lead to a sacking, right? Marginal costing is useful in decision-making process. This point needs to be explained. You will see later on that all decisions in performance management, we decide on it based on contribution per unit. Why? Because first cost is not considered in decision-making. Whether you produce a product or not, a first cost will be incurred. In your decision in your making decision, will you consider the first cost? Whether you go to school or you be in the house, whatever be the case, is going to rain. At that point in time, will you make your decision of whatever you want to do based on the rain? Whatever be the case, this cost is going to be incurred. Whether you produce the product or not, it will be incurred. Do you factor it in analysis or decision making of whether to produce or not to produce? First cost will not be considered. But it's only the variable elements which is specific to the situation. That is what we are going to consider. So mostly we do not use what we want to say is that it is not advisable. It is not advisable to make decisions using profits. To make decisions using profits. Because profits considers first cost, which is insensitive. I don't use that word, which is insensitive to decision making. Right? Which is insensitive to decision making. Whether you make the decision or not, that first cost is not important to the decision. But whatever be the case, whether you make the decision or not, that first cost will be incurred. Why do you have to worry yourself, die for it? You rather consider the variable element. So we are trying to say that it is good to take decisions based on contribution rather than profit. Profit is not a good decision maker. Contribution is a good decision maker. And point 5 says that it is simple to operate. Point 5 says that marginal costing is simple to operate because it does not look at complex cost, the overall cost. It looks at just a section, variable. So it is easy to do. The main disadvantage of marginal costing is that closing inventory is not valued in accordance with IS2 principles, and that fixed production overheads are not shared out between units of production, but written off in full against the profit or loss instead. What are we trying to say? Because with marginal costing, they only look at the variable element in the valuation of the cost of materials. So what happens is that the cost of the inventory will only be the variable element side only. It will not be the variable and the fixed. So the fixed side is going to be absent. So if we try to use that marginal costing technique in valuing overhead, compared with what IS2 inventory valuation accounting standard says, you see a lot of discrepancies in there. Because with the marginal costing, you only factor in the variable element. First element is not added. So there's going to be understatement, right? That is basically what we are trying to see over here. But the next bit, which is of importance, is to walk students through how to determine an overhead valuation using absorption costing. So wherever you are, you need to be with me. Write these steps in your book, then ensure that you're in good shape. The next meeting, one of you is going to rattle this bit out from start to finish. On the day of exam, no matter the type of question you tend to meet, I'll share with you some of the recorded lectures in the case of absorption cost activity-based costing. By the day of exam, irrespective of whatever type of question you tend to get, the way we determine the value of an inventory, determine overhead valuation. The way we determine overhead valuation is still going to be based on these same steps. So step one, what you have to do is that the question given to you, determine the total production. Determine the total production overhead cost from the question, right? I'm starting with costing techniques, then I'm moving to complex area, which all the time comes in the performance management paper. So it doesn't mean I'm going to do that, look at the step one after the other, the topics one after the other. Then I look at costing techniques, then I'll now come to look at, no. I just have to zoom into the areas which is of importance. That's been my technique for performance management teaching so far, to bring the students straight to the areas of importance as quickly as possible. So step one means if we're using absorption costing as a way of determining overhead valuation, every question you get, you need to determine, ask the question, find out in the question the total production overhead cost. Second, determine the total basis of absorption. So the total basis of absorption can either be machine hours, or labor hours. If the examiner wants you to use the two, both to do the evaluation, fine. You still go by the what the question is saying. But normally, it is going to be based on one of them. There can be an instance where you get a question, the examiner will give you machine hours and labor hours. Then he will ask you which of these two should be used as a basis of what absorption. Because in that case, you are to check the job at hand. Is the job at hand mostly machine intensive or labor intensive? If the job at hand is machine intensive, then it's good for you to use machine hours as a basis of absorption. But if the job at hand turns out to be labor intensive, then labor hours will be the best basis of absorption. But sometimes the examiner will not ask you to decide, right? He will just give you information that the basis of absorption should be labor hours. In that case, do not be recalcitrant. Just look at what the requirement is saying, compute it, and proceed. So step one says determine the total production overhead cost. Step two, determine the total basis of absorption. Step three, you compute or calculate the overhead absorption rate. Compute the overhead absorption rate. And overhead absorption rate is for short called OER. This is the meter for charging overheads. So if I have this meter, I just come to your house, and then you tell me the number of hours you spent. Then I'm based on that to say, pay for this overhead cost. I move on to the next house. If they have actually used 5 hours of labor hours, and my base of absorption is labor hours, then I use the meter to hit the number of labor hours that they consume. Then whatever comes up will be the cost to pay. It is the same bit in the case of usage of electricity. The same bit in the case of usage of electricity. So here the overhead absorption rate is the meter for charging overheads. And how do you calculate the OAR? So you say OAR is calculated as total production overhead cost, divided by the total basis of absorption. And then after you get what? The OER. Now that you have gotten the meter, proceed to determine the overhead cost. So we say estimate the overhead cost a unit of a product. Right. So these are the steps in evaluation of overhead using using absorption costing. So steps, you have to write that in your book wherever you are, or probably after the recorded lecture, you can listen to it. So steps in the evaluation. Steps in the evaluation of overheads. Steps in the evaluation of overheads using absorption costing. AC. So these are the steps. Any question you tend to get will follow these things, seeing what steps. So at this point in time, what I'm going to do is that I will share a recorded lecture with you to augment the state in which we have gotten to, so that at least you guys can pick it up from there, right? But these are the calculations, the questions. So the questions, there's a recorded lecture to that effect, which is going to really help you to deal with issues like that. So what I'm going to do is that I'm moving you straight to also the steps in the evaluation of overhead. I'm giving you the steps in the evaluation of overhead using absorption costing. I'm going to zoom you guys through steps in the evaluation of overhead using activity-based costing. And thereafter, I'll look at the other theoretical case, in the case of evaluation of overhead using absorption and activity-based costing, then share a recorded lecture where these two questions have been solved in there. So this question, the recorded lecture I'll share with you, will have the solution from start to finish, right? So you listen to that so that at least we can save a little bit of time. Notwithstanding, we do not want today to actually go without you going through the first topic, right? So steps in the evaluation of overhead using absorption costing. This is a question and absorption question, which will actually should go by the same step. Step 1, step 2, step 3, step 4, that way, right? So that recorded lecture will bring that to light. That recorded lecture will bring that to light, right? Then we move on to the next bit. The next bit is looking at steps in the evaluation of overhead using activity-based costing. They will bring the meeting to an end, but thereafter you continue based on the recorded lecture I'm sharing with you, right? So what are the steps in the evaluation of overhead? Step 1. So I've indicated that here as step 1. Step 1, we are supposed to identify the cost pools. Cost pools are all the time in monetary values. So there's a definition of cost pool over here, which every student should know that definition. A cost pool is an activity which consumes resources and for which overhead costs are identified and allocated. So all the time they are the monetary figures. All the time they are monetary figures. So after step 1, which is identify the cost pool. So every question, if you ask you to determine overhead valuation using activity-based costing, the first thing is to identify the cost pool from the question. And every cost pool is having a corresponding cost driver. So cost pool is step 1, cost driver is step 2. So step 2, we need to identify the cost drivers in step 2. So identify cost drivers for each activity. So the activity is the cost pool. And to every cost pool, there's a corresponding cost driver. So what is the definition of a cost driver? So cost driver, we say a cost driver is a factor that influences or drives the level of cost. As you want to be a performance management student, you are going to incur cost on performance management. The cost incurred on performance management is the cost pool. But what actually influences, what actually drives you to say you want to write performance management? That is going to be the cost driver. And that cost driver will determine what the cost pool will be. So to every cost pool, to every cost incurred, there exists a cost driver. So step 1, cost pool. Step 2, cost driver. Step 3, we are now going to calculate the cost driver rate. The way we calculate cost driver rate is just the same way we calculate what? We calculate overhead absorption rate. But under absorption costing, we call it overhead absorption rate, OAR. But under activity-based costing, we call it cost driver rate. So to calculate the cost driver rate, so the recorded lecture will still throw light on that. So to calculate the cost driver rate, it is the cost pool divided by the cost driver. The cost pool divided by the cost driver. That's it. So let me just give an example. So step 4 says you absorb. Now that you have the cost pool, sorry, you have the cost driver rate, which is just like overhead absorption rate. You now absorb step 4. Then step 5, you calculate the full production cost. So let me give some examples of what cost pools. So some examples of cost pools. Then I'll give it corresponding cost driver. I'll give it corresponding cost driver. So an example of a cost pool can be a setup cost. Setup cost. So a setup cost can be, let's say, let me give an example, $50,000. $50,000. Let me say $50,000. Then its cost driver will be number of setups. The number of setups. Number of setups. Then move on to the next cost pool. The next cost pool can be delivery cost. Delivery cost. So a delivery cost can be, let's say, let me just say $2,000. And its cost driver is going to be number of orders or number of deliveries. Number of orders. Number of orders. So I can give the next one as packaging. Let me just say packaging. Packaging costs. Packaging cost. Then I can just say number of what? Units. Number of units produced. Number of units. But the packaging cost will depend on the number of units that are produced, that I need to package them. So you can see clearly that cost pools are all the time denominated in monetary figures, but cost drivers are not in monetary figures, and they are the basis for charging that cost. Right. So the number of units will determine the packaging cost to incur. So the cost driver here, which is the number of units, drives the cost pool, which is the cost. If you have 5 units, you incur packaging cost for just 5 units. Right. So the same question that we came out with in the case of the absorption costing, we just modified it a little bit for a question of activity-based costing. It was still the same question. Just that in the first instance, let me take you there. In the first instance, the total annual production overhead cost. Check that. The annual production overhead cost here, which is 80,000. Absorption costing will not tell you the breakdown of the 80,000. Absorption costing will not tell you the breakdown of the 80,000 because it actually deals with it in a arbitrary way. But in the case of activity-based costing, the 80,000, each and every one, at least the makeup of the 80,000 should show it. So you can see that here the 80,000 has been broken down into sections, right? Because activity-based costing do not look at things in an arbitrary way, right? Good. So just like those students who actually represented PRESEC, in the case of the maths and science quiz, just 3 guys. But on the day, people tend to think that all students of PRESEC are A1 students. Meanwhile, some students are getting C4, B3, C5, and all those bits in there. So we are not supposed to use the fate of one or two individuals to justify the fate of all individuals. And that is exactly what absorption costing does. That makes it a limitation. We only have annual production overhead 80,000 general, and we use to determine the overall fate of all products. But in effect, each and every one benefit he or she should get is based on the contribution. Right? So just like the normal case of a class, if one student is able to answer all questions, the tutor just concludes by saying that every student is fine. That is exactly what absorption costing does. But in the case of activity-based costing, the effort of one person will not be used to crown the fate of all individuals. So if one person is answering questions, we are not going to say that the entire group are fine. We actually assess each individual differently. Right. So I will share the recorded lecture with you, though the solution is in here for you to still look at it, but I'll still share the recorded lecture with you to help you cement your understanding. So I actually solved the first instance using absorption costing. I solved the first instance using absorption costing, that question above. I solved it using absorption costing, and I also solved it using activity-based costing. But these issues are theoretical, and I didn't deal with it in my earlier submission in that recorded lecture. So let me take the opportunity to go through, and I'll bring the meeting for today to an end. So activity-based costing versus absorption costing. Activity-based costing versus absorption costing. activity-based costing versus absorption costing. Activity-based, right? So there are arguments for and against, right? So in traditional absorption costing, standard high volume products receive a higher amount of overhead cost than with activity-based costing. So what are we trying to say over here? Absorption costing uses the volume of production to charge the cost. So if they are using the volume of production to charge the cost, then the product with the highest volume will have the highest overhead cost. Then that tells us that if somebody is staying in a 4-bedroom apartment and he or she is single, actually stays in the house, let's say travels every month, tends to travel, only stay in the house for just 3 days or 4 days, just like some situation that I find myself in the case of 2019, 2018, where stay in a very huge apartment, let me just say a whole house in its perspective, but tends to travel all every month, just on the run, traveling. Just one individual, single in just one room, and in fact, when it tends to even stay around, the only bit we tend to do is that we do not even put on television. Your laptop is everything, right? Are we trying to say that so far that person is occupying a 4-bedroom apartment, he or she is using electricity more than one person who is staying in a single room? The person can stay in a single room, but the electricity usage is based on the sort of gadgets he or she is using. So the size of the room or the house do not actually influence the electricity what actually consumed. So that is exactly what absorption costing does, by looking at the volume at hand to justify the overhead cost to be incurred. And that is not a good technique to look at. So we said that ABC allows, ABC do not look at that limitation of absorption costing. We say ABC allows for the unusually high cost of support activities for low volume product. So here, we instead of looking at volume of production, we look at the cost pools and the cost drivers as a basis of determining the overhead cost. If you actually use more gadgets, you pay more electricity costs. If you use just few gadgets, you pay something small in that regard. So I'll just say that activity-based costing creates what? Fairness. And if a problem emanates, we with activity-based costing, we will actually know who actually is creating that cost, then to find ways of what dealing with that problem. But because absorption costing jangles everything, does everything there in arbitrary and haphazard manner, if there's a problem, you find it very difficult to know which angle the problem is actually coming from. So let's look at argument 2. Let's look at argument 2. They look at limitations. They will say bye-bye. You have to proceed with the recorded lecture that I'll share, which is actually going to show you how to solve those 2 questions in that document. Right? So I already shared this document again with you and the recorded lecture. You need to stay glued to your seat and actually go through. You can watch it twice or thrice to ensure to cement your understanding. So argument 2, absorption costing absorbs overhead into cost per unit of a product using arbitrary way. This is why the composition of overhead might be different, yet it calculates only one overhead absorption rate, and it uses it in its absorption. So absorption costing calculates only one overhead absorption rate, and it uses it to what? Determine the overhead cost. So we calculate or we determine just 1 meter to determine the overhead cost by all the products which are different. And that is what insane to do that. Why do you use the fate of one person to justify the fate of other people? The fact that one person is smiling does not mean that everybody should smile. Right. So activity-based costing, on the other hand, considers the makeup of the overheads to be different. So it does not actually look at the perspective of what absorption costing look at, just treats every item, every individual as the same. Activity-based costing tends to see each and every one different. That's why each and every individual has his own attitude. And you cannot just say that Kofi is having this attitude, Amma, Ajua should have the same attitude, because each and every one is different in that perspective. So activity-based costing, on the other hand, considers the makeup of the overheads to be different, and thus calculates each cost driver rate. Hence, eradicates the drawback in absorption costing. eradicate the drawback in absorption costing. What is the drawback in absorption costing? It does the valuation in an arbitrary way. It does the valuation in an arbitrary way. We move on to the limitations of activity-based costing. There are many problems with activity-based costing, which, despite its academic superiority, cause issues on its introduction. People tend to see it to be complex, right? So some individuals tend to say that there's lack of understanding in that regard. Some say it's difficulty in identifying cost drivers. In practice, some individuals tend to say it is difficult to identify what the cost drivers are. Last, lack of proper accounting records. Because it is a costing technique, mostly you do not have proper accounting records to help you cement understanding to actually help you determine the overhead absorption rates. Thereafter, after watching the recorded lectures, we have an assignment over here which is must do. And these assignments, you guys have to discuss them in groups. At the moment, I think that I have about how many? I have 5 participants so far. The lives of Catherine, the lives of Joyce, the lives of Maha, the lives of Fia, and I have Theodora, right, over here. So you guys can discuss it later on in the recorded lecture, but notwithstanding, I'll still walk you through to keep you satisfied. The beauty about this bit is that there are solutions to that effect. So you guys can discuss it, right? In a professional environment, whoever you tend to meet, you might not know when or wherever you meet that person again. So we are just friends working towards a common goal. And the more you actually share idea, the more you cement your understanding to whatever you have studied, right? So our advice that as I'm about bringing the section to an end, I'll share with you a recorded lecture which is going to solve these 2 questions, one under absorption costing, one under activity-based costing. And thereafter, if you guys are having time, you can even make it in the case of an online perspective, then those assignments, questions must do. At least you can walk yourself through that. So these assignments must do. If you are able to go through the recorded lecture where I solved the question in the case of absorption costing and activity-based costing, and you're able to also go through these assignments, then we can say that at this point in time, you are in good shape. Now, what I'll do is that I'll share with you 2 recorded lectures in the case of activity-based costing. Let me just say 3. Let me share 3 recorded lectures. Please, we are moving very fast. We are not going to wait for you. You can decide to wait behind, but we will not wait for you. And when you get to the revision stage, do not come and create problems because you are lazy not to do whatever you were supposed to do. So I do not want a situation where I would want to wrap up with students as early as possible, and the students are not in good shape, and that is going to call for giving them time and time again, because when I was busily working through and I was advising them to go through the questions and also learn to ensure that they are in good shape, they were not doing what they have to do. I do not want to waste that time. In fact, I will not waste that time. So, because we are all working towards a common goal, I need to do my job right. You also need to do your job right. So one person is not supposed to sit down not to do his or her job or part of the job, and then we'll call for the tutor doing things over and over again, right? So do what you have to do, and let me also do mine. But if you opt not to do yours, I just actually stick to whatever I have to stick to, then just make a move. So it has been a pleasure being with you as a tutor for this short while. Kindly note that the formal perspective of class for your December setting has actually commenced, and that you need to keep yourself in good shape. Come out with a time schedule, a timetable, and actually follow that. You have to be thinking of the exams. Do not think that it's easy to pass. It is not easy to pass. You need to understand before you pass. It has been a pleasure to be your tutor for today. If there's any question or questions, if there's any suggestion or suggestions, please give 1 minute for you to come out with that. If there is none, then I'll end the section. I'll share with you 3 recorded lectures in the case of absorption costing, activity-based costing techniques in the valuation of what overheads, right? So 1 minute in that regard. Right. So what I advise you is that, as I still wait for the questions, what I advise you is that I'll share the recorded lectures with you. This recorded lecture, listen to it, then now continue with the remaining three. Continue with the remaining three. So from now till say 7 p.m., I think that you are going to be occupied. But if you decide that to say that it is easy, please, you're going to find yourself wanting at the revision stage, right? Good. All the time I tend to say that if I meet a student who has not tasted professional qualifications, professional exams before, I do not like that. But it turns out to happen that at least whatever be the case, somebody has to start from a point where he has not written professional qualifications before. If I meet students who are coming from the academic background, sometimes let me say that I do not like that. Why? Because the students tend to think that the way they learned, they studied in the case of the academic qualification, they are supposed to do exactly the same. And do not do that. The professional qualification is a different background and come with a very good attitude. Thank you very much for joining, and it's been a pleasure having you as a tutor. I'll share this recorded lecture with you. Please listen to it again. There's no problem in listening to this bit again. Listen to it, then now continue with the remaining 3 recorded lectures. Then after, they must do assignments. One of you can volunteer to pick up, share a Zoom recorded lecture and walk you through. If you think that at this point in time you don't want to do that and you still want me to walk you through, please just link up and let me get that done. In that case, I can get that done for you, God willing, tomorrow in the evening. So in that regard, at 8 p.m. God willing tomorrow, I can walk you guys through that. I need to catch up with the September students to solve some few bits, but I was thinking I can wrap up with them as early, but there are still some issues to deal with, right? That is why I'm advising you guys, please. Good. Thank you very much for joining. If there's nothing, then I'll bring the meeting to an end. Okay, so thank you very much. I'll share with you on your page and you can proceed from there. Note that we have comments, and if you have some friends who need to join, please let them join. It's very, very important. Henry needs a lot of students in that regard. Thank you very much and have a very good day. Bye-bye.